So I hope everybody's surviving the volatility out there. Um, Once again, if you have a very strict filter for your trades that you're doing, and your filter may be a percentage of your account, or it's going to be a unit risk, and it's going to be very much like having, you have a lot of bullets. The bigger your bullets get, the size of your bullets become a problem in markets like this, and also your holding of a position. So that's why the hedge funds make money, because the moments like this, and also the option traders. And I'm going to go over again this option guy that I discovered, and I might have done a video years ago, but so digging through all of these different traders and all this different stuff, here comes this guy, and this is also along the lines of the guy that wrote the book about fast think and slow think, and it's about volatility and speed, rate of change, and all these things, because we've been climbing the wall of worry on the stock market. Everybody knows this. Classic saw the wall of worry, but we can also see these kind of effects in the palladium market, which hit an astounding historical high. It looks way more dramatic than gold's climax at 2000, but everything's coming back off the floor now, and the log jam has broke. Now, the virus situation really has little to do with it, other than it's the tipping point that creates this cascading that this guy's going to talk about, and he's an options trader. So I just want to jump to I've never really looked at the stats of people dying, but just before this day ends, let's take a look at how many people have died just from being alive. Today we are at, this is the world meter .info. I don't know if this is really accurate. I mean, they have like some kind of harebrained, what do you call it, identity thinking stuff in here, where they talk about how much natural gas we have left on the planet. Now, come on, people, just step away from the trajectory meter for a second, please. But this is supposedly accurate data. Deaths today, look at this thing climbing, and we have net people growing, so they're still banging, and this will be the corona boom. I like how people are already, oh, I got it nailed. They got a moving average on it already. Got it. Okay, we built a Ranco on the data. And also, you will see the difference between the linear charts and the time charts, rate of change charts, which gives you the curve, the explosion, the volatility out of nowhere. All of a sudden, boom, black swan, basically. What they say, spoiler alert, the guy that wrote the Black Swan book. Now, this is like an 8-year-old video, a pretty old video. And at that time, it was the Fukushima event, I think, that people were like, wow, hey, that's rough. That's tough sledding. And that's, don't forget, the stock market in Japan gave up 10 years of prices in 3 days, where this is kind of this sell-off in the stock market is very kind of consistent. It is definitely the marching up the roller coaster, going up to a cliff beyond, because we knew we were going into insanity as far as overbid and very crowded and very drifty and very scary if you've ever held a position in the markets. And basically, everybody's chasing this dividend because that's all that was available. As the Fed plays with interest rates that aren't even worth the spread of dealing with, right? Once you get done with the spread, who's in that market? So order imbalance, the bond market, they used to talk about the bond market's going to come unwrapped, and actually everything, once they show you the palladium chart, you just have to look at palladium and see that it was very choppy, very, very high volatility. I'm sure on the logarithmic chart it doesn't look like much, but on a real dollar-to-dollar basis, it is brutal. The topping formation is brutal, and that's over. I mean, that, in other words, well, of course, let's not forget, people are trading on a 1-hour basis and a 30-day basis. The guy that's in the market for 4 hours really doesn't see the other time frame. For him isn't even a problem. So the kind of person that's in pain right now, and this guy's going to talk about pain, which is a down market. He's strictly speaking from a bullish position in this first video that's 20 minutes long, because he's going to basically talk about down is pain, up is gain up, pain down, and that it's the rate of change, right? Instant burst and gain. It's really what you're looking for in this. Take advantage of a breakout from no volatility to volatility. How can you make money from volatility? And that the fragile stuff, people that are in very big, they have no hedge, they're fragile, because anything that happens, they're going to feel it because of the size they're in. They're in too big a size. If you're just in a little bit, you don't care. Also, this is the psychology of people. And whether this, you got to ask yourself, who made money from this move, this down move? People that kept selling into it a little bit and accumulating a short position, it all made money one day, right? And people told me, well, you're just ridiculous to sell into this. Can't you see it's in an uptrend? Okay, but that's time-based, and that we'll get into that too. His video is like, oh, now I saw this video 7 years ago, and now I listen to it again. I go, yeah, I knew there was something in there. What he's saying is so kind of counterintuitive and very absurd sounding. And I like that he gets a lot of more thumbs downs he gets, he gets, the more betters it is for him, because I'm thinking, yeah, the goobers just don't get it. And who's selling into that? Was it the goobers, or the pros had to get in early, right? People selling now. So I saw Glenn Beck do a video last week, and him and his wife, what a goober-ette he is. We're going, honey, we're going to go. Dude, the move's over. Okay, this is 2,000 points ago. We're already above where Glenn Beck sold. So I watch YouTube continuously, and I see all these people talking, and no nonsense is kind of bowed out. Now, here's the guy that was like, hey, have an oar in every boat, right? And a lot of people are talking for the end of the dollar. And we knew something was up. In other words, maybe there's nobody in the market to support that, but we all know what's really going on is panic. And there's a book, I don't know who it's by, I can't remember. Maybe it was, I must have read 50 trading books and watched all these guys, the whole thing. And the people that stick out to me, Bill Williams, because Bill Williams is saying, look, I'm just a turtle. He's really a turtle trader in the sense that, and so is this guy. Hey, it's going up, we're buying. Now, it's how big we're buying and how much room we're going to give the market before it either takes us out percentage-wise or takes us out with a hard financial stop of, say, $308. When we reach $295 or whatever this number is because of the amount of tickets you're running, and that's where the unfragileness is that you're going to put in, you're not even going to feel it. These moves that are happening in these markets are just not even, like, if you ask the person on the street in Starbucks, you walk into Starbucks, you say, have you seen the stock market? They'd be like, no, but because they probably haven't seen the palladium market go to $2,800 an ounce and come back $1,000 so hard before this Corona thing even started. Or I don't know, maybe not. But I mean, the topping formation, we all knew that there was something like completely unfair value and out of balance. And it was just going to be a little bit, all you need to do is just flick it with something. Now, it could have been a terrorist event. It could have been, I get the fact that people are just like, okay, this Corona thing, but come on, stop it. We got too many people already. Look at this thing growing. Net population growth. And look at the government spending. So this is like a lot of money. I don't know what that is, 12 trillion. I don't know. Every day. Was it 12 billion every day? I think it's 12 billion. It just keeps churning along. And look at this kind of stuff here. Cars produced. I like television sets bought. That ought to tell you. People are just freaking out. Look at that. People buying televisions sold. Maybe they're buying new ones. The other ones are breaking down. I don't know. Let's be fair. Cell phone sales are up. So I finally got my Android running, and I kind of figured it out. But I'm still learning on the Android. I'm disturbed by a screen that's so small, and some apps don't flip around, and some do. It's like, make up your mind. What else we got? Money spent on video games. Well, now, this is just masturbatorial. What's going on here, people? Come on. Step away from the fucking single shooter. Yeah, people are going to die. This is another piece of bad news. This just in, newsflash. You're going to die. Nobody wants to go spitting blood up on Corona. And I like how beer sales of Corona are down. That should tell you something right there. Like, holy shit, people. What are you thinking? Look at tweets sent today. Google searches. Now, people probably are overloaded, but look at emails sent. Let me see if I can get down to here. The important stuff. Now, here's where it gets kind of a little bit silly. CO2 emissions per this year by us or Mother Nature? Here's where we get, the further down we get, the more ridiculous. Running out of food. Look at unnourished people in the world. Well, I could use some more ice cream about now. I went to the store. Now, that was another thing. You go to the store and you're like, so this is my feelings I had when this thing started to affect the ability to sit down at Starbucks. I thought, okay, so I got it. I'm in a movie. I didn't choose it. Boom. And I thought, God, I don't even get paid to be in this movie. It's actually a loss for, they're closed. I got to go here now. But I did find a better hookup in the grocery store, Starbucks, because they have one barista to design a drink for me. It's not loud in there. It's just perfect. So a big win there. And so I won on that trade. And of course, price of gas, let's face it. Half off? Yes, thank you very much. So there was a huge log jam. And you just knew that there was something when Netflix is people are living so high in the hog and so decadent. This is why keeping a low profile is definitely the way to go, because it doesn't, if your size isn't big, you don't feel any of this stuff happening around you. Other than the fact that you're kind of in this bizarre semi-military lockdown where I see the state police lined up along the highway now, and I'm like, what are you going to fucking babysit me now? I'm in a real nanny state. You're going to die, people. Get used to it. Here's where I have a dispute with this site. Natural gas left. This is natural gas left. Days of the end of natural gas. So that would be the, what do they call it in the gasoline market? Come on, somebody out there knows. It's, peak oil. Sorry. Those would be peak natural gas. Peak oil. Oh, please. And look at this of infected people with AIDS. Deaths by mother during birth this year. Okay? Stop giving birth, people. That's why people are aborting. You think these chicks want to die? That's stupid. Uh-oh. Seasonal flu deaths this year. Now that we've made it down to this number of how you die like this, let's take a look at this number. I was so pissed off last night. I was doing a video and I was recording on the wrong disc, which is just as well because I was so livid with these bozos. The ship of fools that I find myself in. It's like I'm over it. I'm ready to lick a filing cabinet that a bunch of projectile vomiting people with no toilet paper are. So the no toilet paper thing. I didn't complete that sentence, by the way. No toilet paper thing, or thought, no toilet paper. What in the... So I go to the store and I'm like, let's see, they've got my yellowfin tuna by Geneva. No problem there. They got my Wausau crackers made in Switzerland. Tons of those in Walmart. Wausau. Tons. I'm like, I don't even notice this is going on. Amy's organic soup. Tons of that left. Well, they did clear out eventually when all the goobers gobbled up the Campbell's or the what do you call it? SpaghettiOs. So, is it just me? It's day. Okay, seasonal flu. I don't know what the category is, so that could be bad data. But it's March 25th. 112,000 dead. Seasonal flu this year. Okay. Let's just say that Corona's in that number. Now let's take a look at the Corona update. Okay, everybody go hold that in context as we move on to the trade at hand, the market we find ourselves in. Are we blowing up this account? Are we blowing up old people, young people, people that lick doorknobs, people that can't stop fucking with their face? Who's dying on this thing? Total deaths. Okay, so let me get the total death going here. Italy. I'm pretty sure Italy's at the total death. And it's supposedly northern Italy, bad air quality, the largest population of old people. Go figure. This is crazy. This is crazy stats. And I don't know if we have COVID-18 here to really compare it to. I'd like to see all the things coming into MT4. Can we trade dead people in Vegas yet? Oh, I'm sorry, they closed it. Oh, wait, I'm sorry. You can't use the cure in Vegas. Oh, thanks, buddy. Who the fuck are these people running? The governor decides to shut down the state. Go fuck yourself. I'm going to go lick a toilet seat tonight. So the anger levels and just the gooberness of it all. And Nanny State goober. It's a combo plate. Look at this. 7,500 people dead. Okay, what is this divided into 100 and right, whatever this number is? 112 grand. So 100, thinking dollars. People, $1 a person. Okay, so I got it. If we go to the United States, though, because who cares about the rest of the world? No offense, but Italy, come on, people. You're like, everybody's hugging and like deep throating each other just to say hi, like girls that scream and go to the bathroom together. What's going on there? Hey, you're losing your fucking hearing. The girl next to you. Women must just have like a notch filter in a certain part of their eardrum to save them from losing the hair. They get the hairs pushed down in their ear and never coming back off. It's like a snare. It's like a rim shot. You know, you just kind of like, oh. Okay, so my computer's a little slow. So I feel smarter than my computer. How do I feel smarter than a Atom processor? So New York's taking the lead. This is also where they pack them on the subway. I listened to this guy, MC. He gets 7 views, the poor guy. Oh my God, man. He's on my... I'm like, I feel so bad. He's been 7 views for 2 years now. And he's like the most outlandish. Okay, so 285 people. I'm sorry, New York, but how many people live in New York? For the love of fucking Pete. Okay, dude, it's not that bad. 14 new dead? I'm really disappointed, New York. Who can't see these trends coming to the end? Okay, so let's take a look at Corona. Let's take a look at the charts, and we'll see if we can call the end of this trend. Now, the linear charts are like Renko charts, where you can press all the data. You need so many deaths to get you to the number. I gotta get this Corona number here. I don't know. I thought we had total. I thought I had population. I didn't prepare well for this. But anyways, I'm sure you know the linear, the chart of stacking up bodies is different than death over time chart, because you can see the pullbacks that you want to go long on dead people. Let me see if I can find the chart. I know it's in here. Okay, so here it is. How to go long dead people. Okay, this is gallows humor, people. Just don't fucking lose your minds. We're all going to die. Just spoiler alert of the century. It's how we're going to go out. Right? Nobody wants to go out. I also, Okay, United States. How many people die in cars in the United States in 1 year? About 1.2 million people die in a car in the United States. Is this a good thing? No, not if you're in the car, and especially not if it's a painful, long death where you die in the hospital. It's just as bad as corona. I don't think anybody likes the flu because it's an invisible. Okay, you could see a car coming and jump out of the way. I got you there. Plus, don't forget, I looked up these stats too. How many people died in 2018 of suicide? 48,000. So I've memorized these numbers just for the sheer fact if anybody on the street is like freaking out with this mask, and if you're wearing a mask, I'm going to pull it. I'm going to pull it off you. No, I'm not going to do that. But seriously, I'm walking through Walmart. I see this girl with a mask, and I just thought, you should die for wearing that, man. What are you going to? What are you, so hot looking that you're the one that should reprocreate? Like, this might just be Darwin just kind of helping us. If you are 90 years old, already on a respirator, and you get sick, if I was on a respirator at 90, I'm like, bring the corona. In fact, if Kevorkian was alive, he'd probably have doses of corona, and he'd be like, dude, I don't know. You just kind of like, it's natural. According to Alex Jones, who I tuned in and haven't watched him so long, you have to really hunt him down on YouTube. But he's like, dude, zinc. He's giving away. He's selling zinc at half off, and he's saying like, hey, it's designer virus. He says it was designed, of course, for him. It's probably designed by gay frogs in a laboratory. Come on, Alex Jones, right? All right, so if we scroll down here, it looks very brutal. What happened to the charts here, man? I thought we had this. I thought I had this in the bag, but logarithmic. Sorry, total deaths. Oh, that's not it. I know there's one that's going to tell us we can do it by time. That's not the chart. But anyways, there's a soft spot here, and then we pick up the trend again. But there's a climax to these things. And even if there's not, okay, you know what? Life's not one huge hospital that has a respirator waiting for you, and there's nothing that's guaranteeing that the whole world isn't going to get hit by a meteor tomorrow. People really shit their pants. What happens then? I like how that if you don't abide by the law, they throw you in jail, but they're going to let the criminals out. You got to love that shit. So this is the Jabberwock. This is Alice through the looking glass. And this is also going to be a lot of fodder for the all the X-22 people and all the people of the world. And they're going to cash in and they'll sell books. And this is kind of going to be one of those events. Oh, remember that? We'll avoid that. And that's why I think that this guy, Nassim, I can't remember his name, Nichols, has just nailed it perfectly. And it couldn't fit any better. It's better than it's a better fit now than it ever was. Diamond Princess is listed. Okay, it's amazing. Anyways, I can't find it, but trust and believe that accumulated deaths is a scale that keeps stacking up numbers without a time value to the rate of death. I can't find it in this chart, but if you want to go hunting it, I think it's underpopulation possibly. It's the death graph. Sorry, here. I think this could be the death graph I'm looking for. This is more of a drill down. It's the death graph. Now that's so morbid, but this is a fact of life we have to face, is that we might get ass cancer. And I talked about that in earlier videos, that if you're trading, be happy you don't have ass cancer. And I guess this is kind of like invisible roaming ass cancer. In a sense, it's no fun. And, if you can't have your aquarium powder to drink over in Nevada, then you're going to be, it's like doing your own tattoos, I suppose. How many people die from doing their own tattoos? How many people die from having a barbell in their tongue? How many people get an abscessed tooth and die? We're all going to die of something. This is a real, like I said, it's a heartbreaker. There's the deaths total stack up, and here is the daily deaths. So we can see the pullbacks, getting a spike here, but see, this is where the trend is. Comes up, pulls back, comes up, pulls back. You want to go long, right? So your last chance, this is a flag pattern here, these last 2 days, then bam, up. Now, this is my climax at 100,000. And we're all going to die of corona. Okay, great. We'll eat, drink, and be merry, for tomorrow we die. And of course, there's nothing we can do about it. There's nothing we can do about these things. And of course, if we tracked other stuff, and maybe there's going to be some, of course, the problem here, once again, is rate of change is blowing people's minds. From nothing to this, by one particular virus. We haven't tracked other viruses. This is the novel virus, don't forget. This is the mutating. And I did look up for a search. If you look up novel virus or novel coronavirus, you will see a video that was done 6 years ago talking about the fragility of the situation. So let's go to the fragility guy. And this guy just nails it all day long on this. Oh, let me go to his little bio here. This might just start the video. Please hold. Once again, your call is very important to us. Our phone lines are a little overloaded with everybody scrambling because they've not ever. This just reminds me of a bad trade. This reminds me of waking up with an open ticket that you didn't know that you were going to get filled on.
Anyone
okay, this is what.
Definite growth on a physically finite planet is either mad.
I gotta hold this guy back. Okay.
Economist.
We don't want to.
At my computer, so I could write at the limit, but I don't want to just do this guy's bio real quick, so you know who's talking here. And I spent a lot of time in the Wolfram demo. I didn't realize this guy won an award for the Wolfram. Oh, God. Okay, so let's go take a look at this guy's Wikipedia-ness.
Focus politics.
And I don't want to stop the video, so I have to wait for this to freak out a little bit.
It involves the rejection of principles around which a large majority of our fellow citizens were.
Trying to catch up there. Okay, let me close down some of these tabs here, because I have a limited RAM. So those guys are gone. Let me just do his bio real quick here.
Organize their lives.
We are not as endlessly manipulable and predictable as you would think.
That's just going to be a real problem. We just have to refresh the whole damn thing. Anyways, this is really very important fit. It's a perfect fit for what's going on right now as far as volatility goes. And, wow, that's a problem. Okay, so.
Anyone who believes in indefinite growth on a physically finite planet is either mad or an economist.
We don't want to focus politics on the notion that involves the rejection
They're killing me.
of principles
Please hold.
around which a large majority of our fellow citizens organize their lives.
Okay, so here we go. This is the guy. Boy, when you're out of memory, you're out of memory. You ain't going to be swapping to the solid state drive, apparently. Okay, so this guy's known for epistemology, how you know what you know, anti-fragility, which I think he might have invented this word, and his black swan theory, which is the book. And he also has this Wolfram. I've spent time in the Wolfram thing where you can see all these examples of elements and how they graph out and relationship of values, mathematical stuff. And his field is decision theory and risk and probability. This is why he's an options trader, hedge fund manager, and he's a derivatives trader. And his focus is how to make money from things that, just happen. The microstructure of dynamic hedging. That's his thesis, 1998. So certainly ahead of his time. That was before, I think even before 9/11. So he makes profits from financial crisis criticized the risk management methods used by finance industry and warned about financial crisis. So, yeah, the people. So he's going to get into it. Anyways, that's who we're going to check out here and try to connect this to MetaTrader in the sense that how we can approach the market using hard scripts that we wrote. Or you want to write an EA, but I think you'd have to write a team of EAs. You can't just, it's too fragile to have one EA. So here he is.
Anyone who believes in indefinite growth on a physically finite planet is either mad
Okay, so as long as I can be able to manipulate this. Either mad
or an economist.
We
or an
don't want to
economist.
focus
So
on
economists are mad, obviously. Economists got their head up their ass, and all these people doing these projections on this coronavirus and what's going to do to the markets and stuff. Oh my God, people. You just missed buying Boeing at $100 a share.
politics on a notion that involves the rejection of principles around which a large majority of our fellow citizens organize their lives.
We are not as endlessly manipulable and as predictable as you would think.
There's no definition of fragility. Okay, there's no definition of risk. Risk is very hard to pin down, has never really been defined properly. And then I realized that what they call black swan events are not predictable. We don't understand them, but we understand very well that should an event happen, what you'll do. You see, for example, if you have Fukushima and then you have this event, then you can predict very easily, conditional on an event happening, what the results would be. So that should you have a very large deviation or a big event, you know the worst case scenario. So we're shifting from predictive methods to the assessment of the effect of something, your exposure. In other words, are you fragile or are you robust to some classes of exposures? From this, you have a perfect definition of fragility, which is that harm is nonlinear to the size of stone. So if I jump from 100 meters to the floor, I get harmed. Visibly, you get no speaker, no second edition of third edition of the Black Swan, stuff like that. But if I jump 1,000,000 times from 1 nano, whatever, unit, okay, I'm not harmed. You see, so there's non-linearity. It means every incremental meter hurts me more. If I drive a car against a wall at 100 miles per hour, definitely no speaker. If I drive the same car 1,000 times at 1/10 of a mile per hour, you still have your speaker, you see? So therefore, you have non-linearities. And that's the definition of fragility, that based on that, we can do a lot of things. We can explain why when you have non-linearities, as you see here, large deviation, harm from black swan, you see the linear in red and the non-linear in the curve. Large deviations affect you a lot more, whereas small deviations is about even. But now it means that we can measure fragility in terms of its convexity, concavity actually, this non-linearity. When you have a convex shape, for a given movement in a variable, a certain deviation in a variable brings more pain than gain.
Okay, so he's speaking from, imagine this is a stock that you bought, and this is a long position, and so when this thing tanks, that's the pain, ups gain. So he's really just speaking of a bullish scenario, I think. I'm pretty sure.
When you're concave. If you're convex,
Gain up, pain down.
you get more gain than pain.
And he's actually saying convexed, concave. Okay, but I think people could argue that too because they're going to say, dude, it's curved. It's curved up, curved down. Whereas when I think convex, concave, I think about if you were looking into this. Okay, so this is my view of, or my gripe, I suppose, in some level about this, how he's laid this out. But if you're looking into this curve, yes, that's concaved. This is convexed. And later on, he's going to do this. So it's the angle. It's the bell curve, fat tail, whatever. But of course, people have all different ways of naming this too. So not everybody's up for his description of this, but you got to see it through what I think he's aiming at, through his eyes.
Simple, no? So we can build everything in terms of asymmetries. If you have more upside than downside, then you benefit from uncertainty. Very simple. More downside than upside, you lose from uncertainty. This is traffic, why traffic is concave to number of cars. You see, if you have a, say 90,000 cars in a certain city, no traffic jam, 80,000, you add more cars, no traffic jams, then boom, traffic jam doubles. Okay, the biggest bullshit in history is that notion of the economy is a...
Oh God, I think I just crashed it. Okay, so this might be tough for me to record, but I just let it go here, and I just tried to talk real fast if I have a thought. I mean, but he's going to go through things that I think is pretty abstract. You can connect this to stuff going on right now.
No traffic jam, 80,000. You add more cars, no traffic jams, then boom, traffic jam doubles. Okay, the biggest bullshit in history is that notion of the economy is a scale. It doesn't show in the numbers. Companies merge, they're visibly bigger. You see the benefits immediately, this nonsense called synergy, but it doesn't show in the numbers. Firms don't survive. And when they're bigger, after the mergers, there are no benefits. Why? Because something is lost somewhere. I'm going to give you a very simple example of where that takes place. Why adverse events hurt you more. You see the picture of this gentleman? He's a Frenchman called Kerviel. He still has lost 4 billion euros as a rogue trader. But in fact, what happened is he was hiding $50 billion as risk. That was, you have an adverse effect. You have your trader hiding $50 billion. And he had not lost money until then, or very little. What happened is that 50 billion euros cost 4 billion to liquidate. Had you had 10 traders, we call them micro Kerviel. Okay, still a nice name, not, and then instead of having a big bank like Société Générale, you have micro Société Générale. The cost of liquidating 5 billion 10 times would have been a lot less than in total than 4 billion. And this is why, this is a curve. The cost of liquidating small amounts is here. 10 times this here is less than 1 time this. You see, so you have concavity. So I'm defining everything in terms of concavity or convexity. Very simple. When you're convex, the gains are smaller than the pains. And here, pain is bigger than gain, all right?
So I think what he's saying is that he was in a huge position, like way over leveraged. The hidden money, I guess this is like, I'm not really sure what he's talking about there. I think he's just saying guy was in huge. So a little fluctuation, brutal.
That's it, very simple.
One of the perennial questions we talk about, and when we first met, we were talking about this, was the application of your thinking, particularly sort of popularized with regard to the financial services, too big to fail, and so on, the fragilizing effect of size, which you elucidate in your graphs here. I think there's a degree of sort of domain thinking. We might buy that when it comes to the financial services sector, but not so much in other fields. What do you think, Nassim, about the way in which, so you take the UK, it's still a very centralized state.
Yeah, okay.
Our public services are still largely sort of monolithically sort of administered. Is that something you think your insights might?
I don't think in terms of political system. Fragility isn't determined so much by whether it's top-down or bottom-up as much as the size of the unit. You see, because you can have a tyrannical household. You see, like grandmother, tyrannical grandmother. You get the idea. So this is the first thing about decentralization. There's a second effect to show how scaling works. If you double the size of a village, you make the interactions between individuals vastly more complicated. And you know that you no longer have the same biological reactions to your decision making. And let me explain. Some person in Washington making a project, of course, will chronically have mistakes, but they don't get feedback because they don't have any physical contact with the people, with their victims. You see, a bureaucrat in Washington. Whereas if you're running a small village, you spend people's money, you run into them Sunday at church, and they make eye contact with you. They make you ashamed of your mistake if you've overspent. So there's a lot more, there's this natural shame, and as a biological check that operates at the municipal level or a small level that doesn't at the large level.
You talk as well about the way in which complexity within systems increases exponentially, that you can end up having sort of cascade effects. Yes. That really cuts counter to something, say, government procurement. When it comes to IT procurement generally, is that economies of scale are always never present. Let's consolidate these contracts, aggregate size, and we'll save money that way. You suggest that this may be fragilizing, this may lead to problems.
Yeah, what happens is that we know now from computer projects that they scale, the error scales faster than size. As you saw here, I mean, if you look at this graph of black swan effects, the unpredictable cost you a lot more here, okay? Because you have scaling that's nonlinear. This is a fundamental nonlinearity that exists in systems, and naively you think that by having a larger IT, you're gonna do better because, of course, you're gonna have a lower unit cost, but the mistakes are costlier and costlier. You just have to look at history. Large companies commit suicide. Okay, why do they commit suicide? This is, it's obvious in things. So same with IT projects. The gentleman at Oxford, Bent Fleitberg, figured out that complexity, now is making projects harder and harder to predict, and visibly, IT projects are the central problem, because these are the ones that scale, scale down the most. So I agree. I mean, have a centralized IT seems nice on paper, but errors percolate very quickly, and you're going to have problems. There are some systems that are, that are bounded one way, become convex, and injecting uncertainty in that system increases the expected arrival time. This is a property of the system. So this is why delays, a project that's going to be 3 months can last 7 months, can have 4 months, can take 4 months longer, but it's never going to be 5 months shorter, you see. So the errors accumulate one way. So increasing uncertainty and underestimation of uncertainty implies necessarily underestimation of completion time and deficit costs, which explains government deficit. Have you known a government that I mean, it's very rare in the history to see a government overestimate, okay? Usually they get it the other way. They always think they're going to get surplus or something like that in 5 years and never get it. Because of that reason, because projects, uncertainty makes project more costly and take longer.
Do you think that Rohan should go back and tell the Prime Minister that he really needs to smash up Tesco before sooner or later Tesco collapses and leaves us all with no food?
Let's think about it. You have the illusion of getting cheaper food now. Think of if Tesco goes bankrupt. Eventually it will. I mean, all companies go bankrupt. It's not like I'm predicting Tesco. Eventually, when it's going to have a problem, how much you're going to have to pay back. But aside from other factors, it's that when a company becomes powerful, then it starts convincing the public that it's working a public good. You see, and they're employing a lot of people. The government will bail them out. Assume that Tesco had a financial problem tomorrow. You'd be forced to bail them out. But have you ever heard of a national government bailing out a restaurant? No. Okay, small units are not bailed out. So it's a small guy gets a short shrift in the long run compared to the big guy. So I'm saying is that you think that you're buying your groceries cheaper now. Are you really, you will, it may work, okay, but at the end you can only estimate the cost of how much you're paying when you have to add your tax money in the long run. If there's a problem and bailout and other social disruption that you're paying for coming from Tesco.
So this is a problem for you, though, isn't it? Because you're pretty skeptical about the state and the state's capacity to regulate effectively, but yet it sounds like you want a stronger role for the state in breaking up big power.
The state is needed for some purpose, and I keep explaining. Libertarians think that the markets are smart, and the other guys think that the markets are stupid, but government officials are smart. Okay, and I think both are silly. And particularly markets that are not natural environment, Okay, we don't live natural markets. It's, you know, in this age, modernity has created a very weird setup. So you don't have natural dealing. It's all done by computers. And of course, it generates some kind of cascades we didn't have before. So, but the government, what's the role of the government? There are two things based on convexity.
So the cascading is the order imbalance. And yeah, there's a lot of, I think even if you're trading MT4 and you're putting stops in there, not that you're going to feel the market, but the idea that the markets start to heat up and people start to get out of a position, they are feeling it in the other direction, especially once it starts to cascade into these vacuums in the left behind prices that we haven't seen, where we get away from, we go into unfair value, and it may be a creeper gear black swan, but I mean, black swan's typically a spike in volatility, and let's see, hopefully this recorder's going to come back on.
Complexity affects speed. You know that there have been experiments about traffic. Okay, if you have a nanny state
So
telling you
speed's a
drive here,
problem.
stop here, stop there, you're going to have more accidents. And there's an experiment done in the Netherlands by libertarians cite the experiment in the Netherlands, which is a great experiment, and we figured out from it that traffic signals actually worsen, cause more accidents. And we know that more people die jaywalking, fewer people die jaywalking than people die on crossing in regular.
So more people, what did he just say? But yeah, so if you try to nanny state micromanage stuff, you know, more people die, less people die jaywalking. Yes, because they're going to say, I think I can make it. Now, if you put up the light, people are like, oh, still got time. Or the light says I can go, but the other people are like, they don't even see that. Whereas if you're going to jaywalk it, you're typically going to look out for yourself. This is why I'm so, like, always not been a big fan of this groupthink or this, oh, there's a crisis. Yeah, in your head. And you decided to look at the, your left arm. You notice your left arm doesn't look like your right arm. Or you look at your face. If you looked at yourself in a, like an inverted mirror, you'd realize just how asymmetrical you are. In other words, if somebody is symmetrical, you'd be like, are you one of those avatars? Because nobody is symmetrical. And what gives them uniqueness and character is the fact that they are crooked, you know, unsymmetrical.
The street. But the other thing that libertarians using this argument don't realize that speed is dangerous. So instead of wasting time regulating traffic, you should regulate speed. And it's mostly an interdict. You cannot drive faster than 42.6 miles in this zone. That's it, period. Thanks, bye. You see, so government should be there
Thanks, bye.
to protect us from things that are not natural, that don't have
Thanks, bye.
a organic way of fixing themselves. Anyone talking about growth doesn't know what growth means, right? Because if you just talk about raw growth or we want growth, you don't understand that it's exactly like Madoff. You want perfect growth? Madoff.
So you want perfect growth. You want Madoff. You want this 45-degree angle growth without any type of stagnation. Not going to happen.
Is that the kind of thing you want? So people have this problem with risk management. They think that it's two separable items. You have this growth, and then you have the risk. They don't understand that to first, to get rich, you have to first survive.
So to get rich, you must first survive. You've got an account with X in it. When this stuff happens and these goobers lose their mind and they pull the sell button and the market keeps cascading. Okay, if you know that you've got a trade plan for those kind of setups and that kind of volatility, you can enter the market because that stuff fits. But the move that you just saw in the S&P 500 or whatever it is, palladium, gold, you name it, every market, the wheels came off, even Bitcoin, that unless you've got, you can trade more than one position and have it so that you have a position that can make money from a particular kind of event as opposed to this one ideal event, because you're really, if you're going to build everything around a black swan, you're going to wait a long time for it. And are you there to pull the trigger? And were your orders on the market? And when you're big enough, were you in small enough that it's not going to destroy you? Those are just, that's why if you're a day trader that's in the market for 4 hours a day, you know how you're making money. You can replicate it, and this stuff wouldn't even affect you. I mean, the stock market trade that you're in, this is a particular instrument.
People don't understand this logical precedence of one over the other, you see. So, and they miss it. So if you start formalizing it this way, the notion of growth is complete nonsense. You have to use a just growth by something. Sustainability it's not a word, right? I don't understand sustainability. It doesn't have, I can't map it on a graph. But you can understand perfectly fragility based. Is it fragile or not, you see? To give you an example, I have two brothers involved in the same line of business. One cuts corners like BP, makes $4 a share. The other makes $2 a share. Some analyst at some schmuck analyst working, say, for the city would say, oh, this guy making $4 a share is a good buy. But this guy will never make it, probably past a decade. So you lose back everything, you see? Whereas the one who has $2 a share and is robust will make it. So you can analyze the two using one metric, you see? So as a matter of fact, you can no longer talk about $4 a share. You know he's going to go bankrupt. You cannot talk about Madoff as gross. You say Madoff is zero.
So you'd have to bank all of your, if you're flipping accounts, and you've got 10 accounts, and you flip 5 of them, and now you've got 10 times the amount of money you have, even after blowing up 5 other accounts. The growth, it becomes in not going back in the market at that frequency or size. And that's, so he's going to talk about this. It's really about the exposure. He doesn't use the same lingo that I'm thinking of when he says this stuff, and how this pertains to if you have a ticket that lasts all day as opposed to only lasts 4 hours. If it lasts 4 hours, you're waiting for a spike. You're waiting for random spikes.
Okay, so to me, anything that's not robust is zero. Doesn't count, doesn't exist. We shouldn't be talking about it. You see, these measures should completely rule it out, not even discount it. Now there's one thing I did. As I said, we're going to talk about fragility or anti-fragility. Okay, anti-fragility is the exact opposite of fragility. When you ask people what's the opposite of fragile, they say, well, it's robustness. It's not, because the opposite of negatively convex is concave, you see. So they don't get the point that the opposite of one is the other one would be flat. So anything organic benefits and needs randomness. And that's not in the public psyche, you see. Let me explain.
So that is very true. So this is really where we're at, because people are organic. This virus is organic too. It's hard to do linear. It's hard to do these projections so exactly and stuff, because I know people want to do that and bank on things and all that. But here in this last 5 minutes of this video, and then I'm going to torch you and go to the next video, which is more explicitly about trading. But this, boy, these last 4 minutes on here is pretty intense. And he just blows through these concepts. I mean, this is probably the 10th time I've heard this. Of course, I heard it a few times over and over years ago, because I'm like, what the fuck is this guy talking about?
Explain what do I mean by something organic. Has any one of you heard of something called a health club? Okay, now what do you go to a health club for? You subject your body to stress because it will get stronger, no? Okay, so people can understand it there, they can understand.
And this is where this corona thing to me is laughable from the standpoint of, like, everybody's freaking out because, oh, markets, dude, I've been in trades where I'm like, this is just another one of these shitty trades I'm in. The market's not moving against me. It's not moving for me. I've locked up margin in a dumb shit trade. I mean, dumb shit from the standpoint of there's no way that these markets are going to move as fast as you want them to move when you're on the right side of that market. So all the stress of, or maybe you're out of the trade too quickly. You're like, wow, that was quick. I kind of wish that it was going to go at a certain rate of change so I could be very comfortable There's no comfort in these markets. If you're looking for comfort, you really should buy a water bed, okay?
Antibiotic resistance. That if you ingest antibiotics and you don't need them, the germs get stronger, right? So not only it needs disorder, some amount of disorder to survive. So what happened is I have this graph here that applies across anything organic. Up the top, you have a natural system that has fluctuations. And at the bottom, if you constrain the fluctuation, you end up with big cascades and jumps.
Okay, so that is, to me, that is like if you try to, when the government steps in and says markets can only move limit up 900 points or 1,000 points, S&P, Dow Jones or something in the morning. They're creating order and balance like up the yin yang. Okay, because you look at the futures market, 15 cents on soybeans, limit per day, and things go limit up. Go look at an orange juice chart of futures of like there's a freeze. It snows in Florida. I mean, it's not Corona, but it snows in Florida. Look at that chart. You're talking about limit up like 10 days in a row. If you're on the short side of that, you're either going to be buying options, call options, or going to another futures contract that's a liquidity and then put in an opposite order against it and hold yourself from losing any more than that first gap up. Now, you may think it's going to retrace and come back and all that stuff, but of course, then being in multiple small tickets is going to make you more robust. And also, not being in the market makes you unfragile. You're actually robust, I suppose, what he's going to say, unfragile, because unfragile means you have no exposure.
So I use that for political system. Say Egypt, you had some dictator, whatever it is, 40 years. No, it was like here. So an anti-fragile thing, because when you deprive your body of food for 24 hours, you eliminate cancer cells. So you need
to be under stress. I guess I'm kind of addicted to the stress of the market in the sense of I'm used to having a not knowing. And it's I guess I like the stress.
stressors. Things need stressors. So there are a lot of models of these, forest fires, anything organic and complex. Hence, now we have two kind of systems. One, the organic, like you, for example, if you and I had a fight, both of us will end up stronger. Right? No, but both of us get stronger. You say, if someone beats on me, not too much, up to a point, I get stronger, no? But if you beat on this table, will it get stronger? No. So therefore, the organic has atrophy, use it or lose it, needs some amount of stress. And the other one doesn't want stress. So the whole thing, if economists think that the economy is like something non-organic, and other people, it's not formalized that way, it's organic.
That's the big flaw, see? These people have this view of like, I'll look at the dollar index and I can predict the other instruments. Because if this happens, that'll happen. Okay. You don't think the other markets are going to compensate and heal that gap and fill in that void and watch what's going on now. You can go buy gas cheap. High volatility spike, that's over. That's gone, man. Rib retracing from a smash down, and you can go see you just took out the low from a year ago. Whatever, 5 years ago, 10 years ago, you can go back on the euro dollar. Don't forget the British pound was at 220, and it collapsed supposedly. And if it's true, who cares? Because enough trades by, what's his name? George Soros, supposedly selling the pound. And taking advantage of order imbalances. If you people really tear that guy apart, Soros, but he did a video about this, and he's really along the same lines of what this guy's saying is that, hey, I'm just taking advantage of market discrepancies.
Most profound sort of insights from your work, something you say again and again, is that human thought is itself fragilizing, that the limits to our knowledge mean that human thought, human action causes fragility? I just wonder if you could.
Yes,
sort of,
exactly.
unpack
Let me
that.
explain. Let me explain it in terms of nature. You've heard of Mother Nature, right? Does it have an office of prediction? No, it works by itself without prediction. It's organic, and it works by itself. How does it work without prediction? It builds things that are robust, because robustness is the opposite of a predictive system. When you have that, you have to be very precise in the way you see the future. When you have redundancies and you have some kind of built, you don't really care.
So if you load a wagon and you put 40 standard lots in at the when the market hits a particular price, say it's a 618 retracement, and you're saying, I think it's going to go this direction after that pullback or pull up, and you have a target in mind, you're so fragile. But if you're redundant with small tickets, smaller size, you don't care. Hence the carefree attitude that you're seeking in these markets. Mark Douglas, when he said, you're going to trade not carelessly, but carefree, you just kind of accept the fact that the order imbalance you can already see. You're going to go to the store one day, and there's going to be so much fucking toilet paper, you're going to blow your brains out. You're going to go, you know what? The fire marshal's going to come in here and consider this a fire hazard.
When you have two kidneys, you don't really care what's going to make you lose a second kidney. You just have a second one. If you have cash in the bank, you don't want to predict whether you're going to lose your cash because you're going to have a recession, a war with France, or Martians invading. You don't have to consider that you have.
So you don't have to worry about that. You got your money in the brokerage account. You know what? You don't hear any brokers going out of business, do you? I mean, maybe they are. Smith Barney, or some fucking idiot over at Bear Stearns. These people are fucking. You knew if you were watching the funding and all this stuff, and really, really just, wow, I'll give you that last. Here's a last piece of rope to hang yourself with, and the bulls they were so fragile going into the whole time that you climb the wall of worry on the stock market. It's fragile. Unless you got a parachute, unless you got a hedge. This guy's a hedge fund expert. Now, I know no nonsense thinks that hedge fund guys don't make money. And where is the no nonsense guy? I'm surprised he didn't come back and do a video for his how his prop firm is doing. How is his trading model that he curve fitted to the fucking market doing? Like shit. He doesn't have unit risk. He doesn't understand this whole thing about, well, you just need a better indicator. Okay, explain. When you see the chart, I may have to go to the chart and then just do another video about the other video, because I've been doing this for an hour. I'm already tired. Let me wrap this video up here.
You get the idea? So this is the opposite between two systems. Now what happened is that we humans, the more intellectual we are, the more we use things, and the more we build things that are fragile, because they depend so much on our projection of the future. It's called representational fragility.
Representational fragility. So we do these projections, we put a trend line, we have a Gartley, we have whatever the hell it is. It could be even astrology. Right, we have all these different ways that we're gonna look. I got an edge.
You see, you change so they depend on theories and stuff, whereas things that are robust, they don't need theories. Now, research, it turned out that the more theories we have, the less research discoveries we made. So ignorance is beneficial. When you trial and error, you have small cost to pay. It's convex, big payoff. Whereas if you're designing a system, okay, it has more downside than upside. So I'm translating everything in terms of this asymmetry, more upside than downside, or who owns the option. And even ethics are translated in these terms when someone owns the upside and we taxpayers are stuck with the downside. Okay, so it turned out also there's some empirical evidence we can show a lot of things that anything done top down is fragile, it's concave. anything bottom up that takes place organically is convex and likes uncertainty as a system.
Okay, so let me just jump to the charts here because I'm starving to death here. And besides, the corona's right, it's knocking on the door here. Like corona. So, and I don't know if this guy's gonna copyright me. I'm getting copyrights from stuff from 5 years ago, still piling through that nonsense. So let me go to the, look back to him. Let me clean up my memory a little bit here. It's not here. I'm going to go to the palladium market here. Now, this is an astounding chart. I'm at barchart.com. Futures, this is going to be the cash market, CM. Interactive charts. All right, this is the thing. Engelhard, which is a refinery, I think. Got a standard of value. All right, that's taking a while to load. Okay, so here we're going to load this chart. Faster load with new tools. Ikamushu Cloud. Oh, here we go. Now, I think we can see how harebrained this stuff is. I mean, Ikamushu Cloud, yeah, because it helps me make a better decision. So the next video, part 2, we'll get into the fact you don't have to know where the market's going to make money. Yeesh, let me move this out of the way. So here's palladium market. Now, this is a monthly, it's a quarterly chart. Monthly chart 20 years back. And let me just do the a simple breakout system, which is kind of the corollary of the option trader's view or the hedge fund trader's view of how to make money in the market, is from no volatility to insane volatility. And what it would look like in a trading situation. This is the monthly chart, and it goes way back into, we are like so deep into the 2005 here, palladium in 2009. So look at this, boy, look at lately, huh? A little volatility. Of course, in a logarithmic chart, that's going to be softened out because as the higher you go, the less percentage-wise it matters, right? And this is where percentage meets hard risk, unit risk. I don't have my papers in front of me about MT4, but in the next video I'll do MT4 relating to what this guy's going to say about options trading. But just from a crude standpoint, imagine you didn't have MT4, but you had a playbook that said, well, when the market gets quiet, I'm going to bracket it with a buy stop and a sell stop. And this big cascading smash down here into this void as we clean out all this uncharted water, so to speak, price-wise. This is just a bar chart. And we could also make the same assumptions here that this area here is kind of finally filled all the way to this level. And I'm pretty sure this is a year from here to here. So we're looking back 2005 here, nice 15 years back. Well, maybe I'm wrong. I don't know what these quadrants are. I'm not going to scroll down, but I think you get the idea that this is pretty vicious up into uncharted waters into here, and then kablamo, we go down. So let's just pick a criteria for entry, and it's going to be volatility. So when the volatility starts to perk up here and takes off, and we just put a simple buy stop here, and we're going to turtle trade this into here, which means we're going to buy new highs, we're going to buy high and sell higher. So buy. And we have a trailing stop here, and everything's wonderful until we get to retest this top, and then we get the pullback, and then now what? Well, if this volatility is too much for you, you're going to wait for this little day here. Let me zoom in a little bit and get a little more precise with this. Drawing tool doesn't have the best precision, but I'm going to cheat and use the zoom in. Okay, so here, for instance, say low volatility here, up. But are we going to make money from this? And maybe we are. This is a monthly chart. Don't forget, this move down here, you cashed out. How could you have got in that? You could have done a cancel replace with a trailing sell stop as that thing was going down. I don't know what the fuck this is. This is just, I don't get what's going on here. I don't know. I've never, I never saw a thing do that. I did that, but I don't know how to have it. So here, say you made money, right? Because you traded so heavy on this trade, and this is a nice little turtle trade, as opposed to this small volatility, keep making higher highs, and retracing from this plunge, right? Unfair value, high volatility, down hard, drift up. Then the final climax into this kind of rooftop here, right? We hit this area. This is classic market price action behavior. But if we don't have a trade plan for even this 1 month, 2 month scalp here coming back off the top there, I'm just going to call it a scalp because it's just a small move. As opposed to if we bought here and our target is up here and we just keep holding it and we hold it all the way up to here. Now, I don't know if that's possible for some people to hold something for that many years. I think I'd be very happy if we pulled back here, and maybe this is your inside of here somehow you found a 618 to board the wagon. More turtle trading, more just trend trading, going with the trend. And then here is the problem with trend traders. They're going to get their ass kicked all along the way here if they built a trade plan that involves a particular dollar amount or unit amount, or I'm going to say point amount. You're stuck with the fact that if you bought the palladium at 500 and you sold it at 1,000 with a stop down here, right? Aren't you a genius? You held it for a year, you made X. And I'm sure once you start to look at this chart, anybody that's listening that's traded or knows how to draw a trend line, you can make all sorts of idea. I drew a trend line here, it broke here, I sold, I made so much money. I back tested this. It's such a great system. Okay, dude, you've got to do that trade every time like that. If this was a 4-hour chart, is it possible to buy every hour it's down, even though this is a bar chart? I think we could probably find, or just accumulate a robust position, a non-fragile position where we just accumulate here and we take something off the table here, cover our losses, move our thing to break even. Nothing can really touch us unless it gaps down. Right, if we accumulate into this plunge here, and yes, if we don't scalp the dead cat bounce in some regard, we're going to hold on to one giant position and we won't make money until it takes out this high, which eventually happens, right? It comes up and let me zoom out now. That's going to not make too much sense. Zoomed in like that, I guess I could see more than you can on this thing. But I was just trying to give a dramatic effect to the breakouts here. But we see this top retested here at breakout, pulled back, pulls back to this double top. Now you can see all this shit in here. Who's the guy getting in here? You waited this long for this pullback and you didn't trade for 3 years. You sat on that money. Come on, man. That's bullshit. Nobody's doing that. And if you are doing that, it means that your account was open with money in it and you just happened to get that thing going. No. You don't really need that. Okay? You don't need to live like that. Could you have a buy limit here and a buy limit here and you scalped it here? Yes, you could have done that trade. But who's got a stop in? Like you went long here and you put a stop. Oh, yeah, I'm going to put a stop. Oh, they stopped me out. This is a lot of volatility. So my point being, let's get back to the point of this. Volatility matters, people. This is ridiculous. This is vicious. Now you'd have to say, with that much volatility, I am a slave to the time frame. I cannot do anything with that trade there. That is too rambunctious. That is out of control. Let me just go for a frequency of trading of like the weekly chart. The daily chart doesn't work good on. This is spot prices, so we just have weekly ranges. I don't have a 4-hour chart on this. Let's go back 3 years on a weekly chart. How about 5 years weekly chart? Now we're talking. Okay. Now we can see that the guy that's making money from silly little trades like, I'm going to buy this double bottom. There's tons of trading books on a double bottom, triple bottom. But you got to buy every one of these and accumulate, and you've also got to have your stop in, let's say, here. I don't know. But you can see how if you're a palladium trader, you had to wait 10 weeks for the entry. Are you that guy? I'm not. Now, if this is an hourly chart, yeah. In other words, if this is Asian session to Asian session, I'm going to buy this stop hunt. I'm just going to call it I'm going to call it pullback, stop hunt, where the fuck. And here I'm out. Okay, London opens, I'm out. I'm done. I don't need this stuff. I made my parcel. I'm good. I ain't sitting in this thing and like, oh, I bought a Ferrari and yeah, you know what? When the world comes to an end, people are going to see a Ferrari. They're going to steal it and they go, hey, can you loan me some money? I ain't got time for that. I don't want to talk to you. I'm paying for the luxury of living a low-profile, off-grid life. I don't need that. I'm not selling courses, although I am going to kind of go through my approach through MT4 using the unfragile or robust trading of like static risk, unit risk. I don't need to know about if the market's going to go up and down. If I put a hedge on, every time the market gets quiet, I put a hedge on. Right? Breakout either direction. So here, market's quiet. It's going sideways. Okay, you know what? That move there. People made a boatload of money there. I think what people are doing is they're putting like a moving average on here and going, yeah, if I bought every pullback, do you got a trade plan for every pullback? Can you accumulate that thing? You're wasting your time back testing a system like this, saying, oh, it's getting me good entries. No, I do want to get into Ryan Brown and later too. His trying to capture these moves, you know. Oh, look at this system. It bought here and it bought here. Dude, what happens when it does this and what happens when it does this and what happens when it does it? You're going to blow up the robot. No robot can deal with that. When we took out 1,500 on this weekly chart of palladium, wow, pullback, buy, pullback, buy. Wow. Now this, you just have to say to yourself, what are you thinking, people? You goobers grabbed that and bid it up to 5,000. You know, you got to peel something off this. You know, as you come up on, look at this price, 2,800 for palladium, and it gives back $1,200. Why? Because look at this move. $500 in 1 week. Man, gap down, fill gap, engulf. But isn't that just a microcosm of this? Same behavior, different dollar amount. This is the exact same move as that. What's the difference? And look at it now. Now look at you. I told you no kids. So, Scarface. In the car. Blowing up the diplomat's car. Wow. Staggering, huh? And another thing about it, did it really matter that this double top retested to the penny? Did you have a giant? You needed to have a giant ticket there, so to even make money from that move and be flat right now, you'd be like, oh, look at that thing gap down. Look at that puppy. Oh my God, so incredible, right? Let's go to the stock market. Okay, so now let's look at the DAX. And this is the same behavior. We cascade into the void. We fill it. We retrace. Same story, different day. Oh, Boeing. Let me just take a look at Boeing here. You're up $50. If you bought it 90, you could have bought this thing as it's tanking. And I don't have the full data set on this. But look at Boeing. Now, up here is where they're blowing up their MAX planes. And apparently, you know, a green, you know, a Thunberg plane, the Greta model, Save the Planet plane, over smart plane, a real piece of shit. And it's designed to be so fucking autopilot. It's autopilot on fucking autopilot. and people are dying on that plane. And where's the blood? Where's the talk about rate of change death? So you're seeing this death rate of change. How about how many people died on that MAX plane? Boom, you're gone. The rate of death is so high. Yeah, okay. So viruses have a different performance rate, but that's a pretty spiky rate of death, and it didn't seem to affect this company too much. This was over here, right? Is this the big? I don't know where the people are dying in the planes here, but they blew up like 2 or 3 planes, and they were told it was going to happen. Dude, that plane ain't going to make it. Oh, it's okay. We got it. We got it. We're experts. We fly planes. But goodbye here on Boeing. Gobble up. It's not like we can't tank some more, right? I don't want to get into candlesticks, but I will. Candlesticks are very complex because it includes the opening prices, where if we go to the line chart, we see that we don't have that issue. It's very clean, very utopian. We time the market here. We price the market here structurally. This is the support, becomes resistance. This you sell every week rally. You sell. No sells here. See, yeah, this is a very simple system. At the market trading, of course, we have to worry about the stops. We sell this rally. We sell. We sell. We sell. We buy. We sell. We buy, we sell. Now, if you had a dynamic, and say you've got 50 tickets you could run here. I don't trade stocks, but because I don't know what they charge me commission-wise for all the tickets I'm running in Forex. I don't know if I can afford it. Because you'd have to buy 10K or 10 units of this thing, dump 5 cover, maybe dump the whole thing out at this last known support. This is amazing, and this is down. I think this is down a few days in a row, and finally a retrace. But the guy that gobbles up Boeing is plunges below here. I'm sure people are like, "Oh, I can't believe you're buying that. I cannot believe you're buying." Okay, well, you know what? I'm not betting everything I own in my life on that. So I want to look at the DAX here. I know I've got it on here. Oh, here's gold weekly. High volatility gold couldn't keep up with palladium to save its life, but look at this move. Look at the psychosis here and the overreaction, and this is my just range chart. We all knew there was going to be a real selling opportunity. Once we got above this thing and we clean out this, and this is already one and done, people are getting filled on that and making money without even caring what crude oil or Corona is doing. Or Heineken. I know I got the DAX in here. I got a candlestick DAX in here. Look at oil. Got a line chart here of crude oil. How about that move? Let me take off these price grid. That's the 50. Wow. So a lot of scalpers gobbling up everything below here. I somehow missed the indicator there. Oh, God. Here. I know it's there. Okay. Clean that up a little bit. Huge sell-off. But how about this sell-off? Nobody's talking about this one. And I don't know. I watched Rush Limbaugh, and he said something just so stupid, harebrained. I don't get it. Somebody please explain to me. Got some explaining to do. He's like, well, the stocks are down because crude oil's down. Really? Were the stocks down heavy here? I don't remember that. Somebody remind me about that. Well, yeah, stocks are down because crude oil's down. No, dude, people are shitting their pants because everybody just stopped running their business. And everybody's shitting their pants because they have fucking order imbalance. Who's going to pay that? I don't want to get into all of the hair. Everybody. I'm sure everybody's aware of all the harebrained bullshit that you're hearing about. All these psychotic goobers with their heads spinning off. Dude, you've not even traded Forex. You don't even have a clue. This stuff happens every time London opens. There's volatility, and if you're in really big, yeah, you're gonna get a boo boo. You're going to get an owie on your account. Gotcha. Duh. Dude, fuck, anybody's trading leverage of any size knows that it doesn't take much to make and lose money. And this looks just a classic chart to me. This is monthly oil chart. By the way, let's go to the weeklies and take a look at what happens when you just change time frame. Look at this sell-off here. That was last year. I didn't hear anybody jumping out of windows. Stocks really dived. I don't think so. I'd have to do a mirror image of the charts. But I like crude at this price. I think it's finally fair. For me, it's a fair value. So it's actually that's also what side of the market are you on here? Let me compress the data. So that matters too, data compression. But boy, look at that move. I think this is going to be a rarity. We're going to see these prices. Huge. And supposedly this is the oil war with Russia versus... Oh, is it really? Stop it. Come on, people. Don't forget here, this is the crash. This is where they were talking about peak oil and it's going to $200 a barrel. Oh, really? How'd that trade work out for you? Look at this. Dude, I'm sorry, this is a bigger sell-off. I'm so sorry to break your heart. As we clean out this void, and what happens again? Ultra lows, people are buying. A smart money. Yeah, if you consider smart money people that make money doing this stuff, is this smart money? Were the pro traders short because of that little trap up here in this fractal wick, this Williams turtle trade trap? Taking the other side. But yeah, putting on a hedge here, having a hedge fund. Whichever way it blows, whichever way the wind blows, you okay with that? It's not going to make new highs? Is this an ascending triangle? Of course, I'm going to say that in books there are ascending triangle. Look at that, works. I like that. That's really good strategy you have. I suppose this is the shoulder, head, shoulder, inverted head and shoulders. I like that too. That was a good trade. Okay, that's all projection. What we do know about this move here is that people that are buying here all the way down in a robust unit risk where they don't give a fuck and they got a master stop down here and they're going to scalp to here on something and maybe they get stopped out a few of these trades, but that's what I'm doing. I'm putting in a basket of orders, which is what Ryan Brown's trying to do. But he's trying to let the robot do it for him. That ain't going to work. You can't let a robot do this stuff for you because this move into this move, is there any modeling system that could predict that? What you do know is that when you see this high volatility up, there could be a backlash, at least to here, and maybe you did buy that. But if you bought one ticket there and you bet the ranch with a stop here, you lost X. But what if you had a hedge system that got in on the monthly, on the weekly it got in and it was trading a breakout into that, it didn't care. That's not really in people's playbook because they want to be able to say, oh, dude, you don't understand. It's got a 618 here with the 524 to the 618 harmonic. Gartley, I just scanned. I just picked this trade up here. Okay, we all know people scalp to this floor here. And I want to finally, I've done a few videos that crash, but there was a guy that sent me an email. He said, my broker's, I'm in a big position. I want to scalp to the floor and get out, but, I can't execute fast enough. Well, if you had a hard exit there, it would have just cashed out. And of course, we could end up going higher and engulfing. And of course, whatever size you're in there, like he said, just surviving these markets and being able to suck something out of it because you have a particular trade plan, particular risk. Not a lot of crystal ball people are going to say, you know what, we're going to sell here, and we know this is the apex of the triangle because I thought this was the apex back here, and I thought this was the last hurrah. And don't forget, I was in a trend trade. I built a model on this. That's how I'd roll. I got and all this big wickage here. I just knew I had to buy that. No, but you knew that when you saw it taking this out, going back like This is like 5 years. Now, I do know this is a year from each one of these slots. 2 years up, 1 year's down. This is a half a year down. This is 2 years up, half a year down. This is ridiculous. Unfair value. People are gobbling that up. They're making so much money from this. People dying. Another immoral thing traders need to do is make money from people dying. It's money. Where is my chart? Yeah, I'm going to get it here. I know I got it in here. Here it is, the German 30. So I marked this off last year. In the last year, I'm like, wow, look at this. And the tippy top trap. And who bought down here? Well, if you consider people that made money, yeah, that was a profound area to buy. So let me say, anything below this, people gobbled it up. Was anybody got a stop in there? They'll never touch my stop. I got a stop back here. Yeah, how'd that work out for you? That's the monthly. Here's the weekly. Let's condense the data, and then I'll let you go back to your life as you know it. I'll put a link to the other video in case they don't get to the video, but it's pretty profound. He talks about actual trading. This is the compressed data on the weekly. I'm going to compress one more time. And every time you compress it, now it's going to turn into a bar chart. But holy majoli, that is the daily now. I'll compress it as far as I can here. How about that move? How about them stocks? And how about buying down there? Anybody buying down there and gobbling that up? I don't think so, because unless your trade plan involves that kind of psychosis on the weekly. Once again, the candlestick chart's complex in the sense that we gap open here. And you need to have, it's complex for the sense that it shows us that open and then that tank. Opens tank's little body. Dead cat bound through scalpers, then pause, then gap again below here. And here comes the big money. Deep pockets are buying all the way down. And you had to have deep pockets because if you are going to put small tickets, I mean, you have to have deeper pockets than the next guy, because if you get in too heavy here and stand in front of this with your orders, these are supposed to be buy limits. But if your buy limits evaporate every day, this is where it becomes unfragile, because you're just exposed to the tail end of this. After the explosion down. So the next video, he's going to talk about the whale tail and that stuff. But I could go, here's the S&P 500 coming back off the floor there. Wow. Did they punish this baby? And this is just my complete volatility chart system, where this is all nothing but volatility. And you had to know that it was dangerous. Okay, so this is a pure bar chart, just a high and low, no opening or closing, and no direction really. Well, unless you can just see that it's going up. But, you know, the guy that's, like I said, once again, the guy that has a trade plan that to take advantage of this burst, this breakout, he made money. The problem comes in when you start to get moves like this, and now this is a lot of volatility. This is a lot of range, man, to deal with. And here's another little mini black swan, another gobble up, and then here you go. Once you took this out, people were like, what in the fuck is going on? People selling into that. Okay, the only time they made money was that plunge, this plunge, and this plunge. And this should have been a heads up that the volatility's picked up. I know the no-nonsense guys like, dude, we have to have more volatility. Well, how you like it now? And I'm curious to go look in the no-nonsense Discord to see how these people are managing Some other currencies are going berserk, like the British pound, like this. We won't get into that right now, but stocks are the most dramatic thing and the most gooberish thing in the world. These are true investors that lose money unless they're shorting this on margin. They're losing money on these trades. And even if they shorted that, did they get out here below that wick? And did we almost retest this breakout point? Almost. But once again, the guy that's in there for 4 hours, or the daily chart guy, he doesn't care. Look how quiet this, and here's the dailies. Range, breakout, plunge. Oh, end of the month, plunge. End of the month, sell off. Up, oh gosh, the air is getting kind of thin, guys. You take this out, oof. When you took this out, and you took out this, people were like, oh, I get the fact that the people came in there and they gobbled that up in all the maybe there are algos that can track this low. I don't think so, but wow. Scalp to the floor as they gobble up prices from months back, November. So here is the October lows, tagged and bagged. Then, oh God. Oh my God. So this is tough sledding here. You could have scalped that because you can see it made it higher. And inside of here, I'm sure there's scalps on the 4 hour. But unless you have the ability to step in here, you'd have to trade very small and very wide. And that's, most people cannot adjust their system. But in MT4, we would be stopped out of stuff that is beyond our capacity. And we realize it's a buzzsaw coming at you. If you're trying to catch a falling knife like that, you got to have a lot of fingers very wide apart, because you're going to lose a few fingers there. This is not breakout territory unless you go down the 1 hour chart. And if you go to the 1 hour chart, you say, why don't I just trade the 1 hour chart? It's a lot easier. Yeah, okay. Here's the 1 hour chart on the dailies. It's a different world. You got a buy limit here. You're cashing out. You made money, right? So the frequency matters here, right? Trapping people to break out of the high of the day. Oh, I can't believe it came back and plunged. Oh, look at this. Scalpers. 4 hour trades. There's 4 hour trades. And there's other trades. Take out this wick. Oof. Backfilling that void. Another low. So this whole time this has been going on, day traders are making money. You think they care that this thing plunged off of a 30,000? No, their world is this. Yeah, fish cannot see water. Okay? You don't see that. You're trading this. You're swimming in this all day long. You don't see water. You're just like, dude, my trade plan is like this. This is the 1 hour. Okay. So, unless you can trade this psychosis, yeah, you know what? The guy that's trading this has got to trade pretty big, right? And then the accumulation here comes back to the floor. This is the floor I marked off on the other thing. So this stuff exists. This is max zoom out on the MetaTrader daily. Comes below here. People scalp to this floor now. They gobble this up. They scalp to here. They gobble. So in the 1 hour chart, you can see you can make money from random. There's a black swan happening like every day here. Up and down. But if we accumulate on limits, now he's not doing that. He's an options trader. He's completely from no movement to explosion. He makes money. But I'm going to try to correlate this to the style of trading with 3 types of tickets: market, stop, and limit. Because he's just doing, he's fragile in the sense he's only options trading. We should be able to extrapolate his concepts and use the fact that these things do exist. That jaywalking is safer than following the light. Yeah, you're going to be like these cattle. That's why they have roundabouts. They're putting roundabouts in, right? traffic flow is based on a dynamic situation. Red light, green light. People are going through the lights. I mean, they're like, you know what, stop sign? I can see like a mile down the road. Hello? I love how the government. So, yes, speed, obviously. If people are going slow, it's really hard to get killed. Bumper cars aren't doing 100 miles an hour at the carnival. Anyways, so I post this later on. Come back with another video, but I haven't had a chance to read anybody's emails or their postings yet. I don't want to distract myself with that right now, but yeah. So I just been hanging out and playing guitar and just doing the day trading thing because I'm not an investor. I don't get involved in these psychotic moves. Look at the euro to the pound, just to talk about a currency there. And look at all the psychosis here. So a lot of tremendous psychosis. I don't know what else to call it. Volatility, right? But in the end, as we zoom out on these charts, we can see how absolutely noise-ridden this chart is. This is going back, like, each one of these dotted lines horizontally is a year. That's a weekly chart of the euro versus the pound. Is it really going anywhere? Can you make money from these fluctuations? Yeah, you can. So you're either going to get in at the market or on a breakout of confirmation on stop, or you're going to go for the, I don't know, it could come down here and you're going to stream limits down. And as you watch them come into your limits, if you don't think you're in big enough, what you perceive to be a retracement or a fluctuation, or even a target, but multiple targets with multiple stops, it's the only way you're going to survive it. You can't just be dialing your robot to be more and more robust and robust and robust. It's not. You think you're going to, like the funniest thing I ever saw in the world was optimization. When you're MT4, you think you built the holy grail and you could hit optimization to like dial it in better. It's not going to happen. You're not going to build the perfect girlfriend and then, well, maybe you're on the replicator. That's the dream of the holodeck in the Star Trek episodes is, give me hot babe number 48. 48 and a half, please. 618 proportions, please. Yes, her breasts are at 618 to her ass. Okay. Sorry for the guy that's offended. But yeah. So let me post this thing, see what happens. Let me make sure this video's got audio on it. Otherwise, people say like, okay, I think I see what you... there's no audio. I did that once. I had no audio. I never took the video down. I thought, it serves you right from trying to watch my audio, my